Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. I tell you, you cannot get more cattle than where I'm at right now. I am in Bassett, Nebraska, where the Sandhills Ranch Expo is underway, and they got some rain. That kind of leads into what we're going to be talking about today. Like it or not, we're still in one of those weather-related markets, and the feel that it's given to this trade really affected when those crop ratings came out, really affected the way those feeder cattle reacted to that. But we're also going to talk a little bit about this cash market lower over last week. And how about the funds, a big long in the cattle? The guy that's going to give us all the details today is Brad Kooima. As you can see, he's joining me. Kooima and Varilek out of Sioux Center, Iowa. So you and I can't get rain, but they got some rain here. Pastures look great. Cattle look amazing. I just wish we could get the markets to do that.
Yeah, I'm with you 100%, Susan. Thanks for having me on. It's always fun. You know, it's funny, Bassett, I've got great memories as a little kid going along with my dad to the sale barn at Bassett Livestock. Yeah, that and Prussia was the two places I remember going to as a kid. Yeah, I can even remember some of the names of the players back then. So anyway, they're really good, aren't they, Tommy? You know, so anyway, it's good.
Well, okay, so before we jump into this cattle market, we got to bring up the important role that these local sale barns do play in the communities, but also so vitally important for our cattle industry.
True price discovery.
Yep.
That's the description of a sale barn, in my opinion. Yeah, where buyers and sellers, the guy that's selling it, he's coming there to sell what he's got, right? And he's going to represent it as best he can. And we're going to decide those guys sitting on the benches what they're worth today. And I don't know of a more fair way to establish price, open, transparent, negotiated. I wish it was all like that.
Yeah, no kidding. And unfortunately, we're having to deal with a weather-related market on the livestock side. We've been dealing with the grains, but it's kind of filtered over to what we see in this cattle trade.
Without a doubt, I don't relish these kind of markets, as you know, Susan. I'll do my best to try to talk about them, but you know, we're going to be with this sort of a market here for a couple of weeks for sure yet. You know, traditionally through the 4th of July weekend, because of the change in the crop ratings that comes out on Mondays. This time it came out yesterday because of the holiday Monday. You know, sharp drop in the corn ratings, unexpected. My state, Iowa, dropped 10%. I wouldn't have anticipated that at all. Clearly, no one did. That's why the market responded like it did today, sharply higher on the corn, which translated into sharply lower feeder cattle, which, of course, you know, kind of set the tone for the back end of the cattle market for sure. So, trade and weather market. I don't pretend to be able to predict it. I happen to live in a part of Iowa where the crop looks really good, and I know you go 40 or 50 miles someplace else and it doesn't. I'm 65. I farm. I get it. You know, I mean, market, of course, is hyper. I think sensitive now because we come off a short crop last year. So if you happen to go back to back short crops, of course, it could get pretty crazy. I don't root for that as a cattle feeder first. I just soon know what my cost of gain or thereabouts is going to be because it has a lot to do with what you can pay for feeder cattle, of course.
So is this just going to be a temporary blip, hopefully, for these feeder cattle, the dive that they took on a Wednesday, that maybe we might start to see a bit of a turnaround once again for them?
$17 blip. I'm just going to smart off here to you. Yeah,
I know.
We just went straight.
You know what I'm saying?
Yeah, you're fine. You're fine. It's a good question, and I'll try to give you a decent answer. My view would have to be more the long view of what I believe the cattle industry is in, and that is that we're going to flex from liquidation created by drought and economics to rain in the grass country. Okay. And I think, you know, the area, particularly what the corn market cares about is this eastern Illinois, Indiana, and western Ohio, that spot there below the Great Lakes, that's dry. Okay. That's not cow-calf country. Cow-calf country, in my opinion, is getting along pretty good with weather. The Dakotas, Montana, parts of Nebraska, finally, Colorado. And if that is indeed the case, that we start heifer retention, there is going to be less available feeder cattle supply. So, you know, is there a bottom to this thing? For sure. And at some point, we'll hopefully put the corn price a little bit in the rearview mirror and deal with what overall supply is, which I believe with everything that my analytic mind is that there's less available supply coming this coming fall. So, yeah, of course there is. And in fact, today the comment in here was with, you know, we're the other side of that transaction, Sioux County, Iowa, we buy feeder cattle, right? You know, so everybody was kind of getting like, well, do you know, kind of like excited to think that we're going to have an opportunity to buy cattle on this dip, this feeder cattle on this dip. And I think there'll be a lot of interest in that, frankly. And yes, there's, we had a big break already. Let's not get crazy down here.
Okay, so maybe that's what I was thinking when I said blip and the bottom in the market and see a turnaround. My apologies.
No worries. It used to be $18 was more than you'd move in 2 years. Now we do it in 9 days, and we got, well, no big deal. Yeah, whatever.
So what about from a cash perspective on this? I mean, we see another week where we saw lower numbers in the cash market. Comes as no surprise considering we're into the dog days of summer.
The ability or how easy they do it in the South, though, is a surprise, Susan. I mean, good grief. I mean, they couldn't wait to sell cattle at 180 yesterday, the first day of the trading week. The lack of negotiation down there drives me nuts, as anybody that's ever watched this program that I talk about. So yeah, we trade cash cattle 8 to 10 over the South and have for months on end. This week, not so much. The trade here finally broke loose at 185, and I think that was because of the poor trade in the South and because of the futures market influence, where you breaks your confidence when you watch the futures go down. And if you're a hedger, you become a little easier because you're going to play the basis, right? Trade the basis. And so the Packer's been, of course, he's been smacking his lips for an opportunity to get this cash to break and get a little leverage back his way. And I think he indeed got that done when he bought so many cattle 2 and 3 weeks ago. So he now has some inventory where he didn't have to try quite as hard. But having said that, big slaughter last week, big slaughter yesterday and the day before. The Packer's still willing to kill him. So, yeah, to sit here and say, well, we're at 190 and we're just going to stay at the all-time high for the near future. Come on. It's the time of year where you're going to go into more cattle and less demand. You're going to break beef a little bit because you always do. You're going to switch the features from middle meats to hamburger hot dogs. I'm not overtly bearish. Don't misunderstand me because of the steep discount that already you've had. And look at the way the back lunch traded today. We had December cattle for a little while in the 175 slot. And I think all of a sudden, boom, 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 we rallied 100 points because people are going like, yeah, well, that might be where it looks like now, but where are we going to be back there? And I think that's going to buoy the market, but we're going to have to chop wood is an old saying for go through markets you don't like. And I think you're going to do that for 2 or 3 weeks, lower cash and we'll see where the future stabilize.
So what about the funds? What are your thoughts on the funds in this cattle complex?
Well, they are part of the market and maybe the biggest part of the market, Susan, right? So we got big fund, long position in the cattle. We love them when they're on our side, right? So now we got a big position long on the funds and we're coming up here at another week or so where we'll start to talk about the fund roll, which is the Goldman roll, which is just one of the funds. There's a lot more than just the Goldman, but I'm a little bit anxious to see how we're going to handle this fund roll when there's that many of them. Okay. They're easy to buy on the way up, but knowing that they have to start to reduce those positions, sell the August, then they'll buy some Octobers, maybe not all of them. Maybe they'll buy something deeper than the October. But I would, August still looks to me like to be I get asked, don't you think August is too cheap? Yeah, maybe, but not for a minute here. I want to see what happens with the funds, because I know they got to sell a lot of August here in the next 2-3 weeks. So I wouldn't fall in love with the August. Let's take a look at it here down the road a little bit.
All right. Sounds good. Thanks for joining us this week, Brad.
Fun to do it. Thanks.
All right. Just want to remind folks, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. That's been this week's Cattle Call from Burwell, Nebraska and the Sand Hills Ranch Expo. I'm Susan Littlefield right here on the Rural Radio Network.